Hi, folks. This is Lee with the Market Sense for the week of August 18th, 2020. This is a weekly bond market chart, and after a big breakdown last week, we've turned back around. And I say a big breakdown. We were talking about this. After the breakdown here, they tried to go to the upside, really nowhere for them to go because interest rates would have to go below zero, and God, I hope that doesn't happen. So they kind of gave up, had a little breakdown here, but that's probably about exhausted the selling, just got them back into the middle of the congestion area they've been in since March. And so they turn back up here, and there's a very, very high probability that they will reach this 179.18 area here. That's a very high probability. Support 176.05, might have been a reasonable buy if they got there, but it's better that they didn't actually. And do I think they could go to 180.30? Well, yeah, they could, depending on what stocks do. It's kind of interesting. Ever since the pandemic started, everything's up. Stocks, bonds, gold, you name it, everything's up. It's kind of weird. Anyway, what we're looking at here looks like that turnaround of exhaustion, just like we would expect. I'd expect them to go up to the bottom moving average at an absolute minimum. They could go higher. Didn't really give any follow through to give something to buy against, though. They just have opened and turned up this week, which, again, is not surprising, just hard to get involved in that. Now, looking at stocks, well, boy, this is pretty relentless, isn't it? Last week, we had the chance to buy a very high support if they got down to the upper moving average. They did not even get there. And then they went up to resistance and not breaking it. And I hesitate to call this resistance because once we get into new all-time high territory, they're just targets. I don't really consider them resistance. And it looks like we're kind of doing the same thing this week. They've opened up this upper moving average here, which is around the 33.35 area. That really shouldn't even be support this week. Support would be better down around 33.05 here at the middle moving average. But they haven't traded either, clearly, and they're already up into the 33.91 target up here. There's just not much you can do here. They're so relentless with very low volatility. It's kind of surprising to see a market make new all-time highs and be this quiet. Not the first time this market has done it in the last couple of years, but it's just not the long-term norm for the way markets behave. They usually get excited at new all-time highs, and you get some extra volatility, and you can read the price pattern. There's no price pattern here. This is just tiny little bars going up. The range is shrinking as they go to new all-time highs. But at the very least, hopefully remember my rule. You do not sell new all-time highs. That's a good way to lose money. So, you can watch it in admiration or see if there's a breakdown and give you something to buy at some point. But right now, I'm just on the sidelines watching. Now, we're going to introduce analysis of the QQQ. That's the ETF that represents the NASDAQ. The tech companies in the S&P have not exactly traded together for quite some time now, so it probably makes some sense to analyze both of them. And as you can see here, this market has been at new all-time highs since June. Well, at least in June, they took out the previous all-time high, and they've been working their way higher ever since, including this week. And similar to what we mentioned in the S&P, they've got this support. It's not really support. 27.91.92 area. That really shouldn't have been support this week. The better support is down here around 268. Doesn't matter. They haven't gone lower than the upper moving average, and they've taken off. And the upside target here at let's call it 276.5. They seem to be clearly blowing right through that. So, same situation sort of as the S&P. New all-time highs is no time to be looking to sell a market. So, there's not much you can do unless let them top out and then see if there's something we can do. But I don't want to be the hero with the arrow in my back who's trying to sell them up here. So that's what we've got for you today. I hope you can find something to profitably get your